Welcome back to the MyWallSt YouTube channel. Today we'll be looking at some of the fastest growing industries over the next decade and how to look for the leaders that could complement your portfolio. There are two factors we'll be focusing on to measure how fast the industry is growing. That's compound annual growth rate and total addressable market. The total addressable market indicates how large the entire market opportunity is for a company. The compound annual growth rate is the measure that determines how quickly an industry or company is growing. Several factors influence this, including consumer and business expenditure, customer growth, consumer adoption, and revenue generation, for example. If it's growing double digits, that's a good sign. Here are three industries that are growing incredibly fast. Less proven than others on this list is the Metaverse. Although we're yet to see much traction when it comes to real-world use cases for this technology, whether it be for entertainment or business operations, it's projected to grow faster than all others on this list, a 43.3% compound annual growth rate over the next 6 years. Even if you're not convinced by the notion of virtual reality, having some exposure to this one could reap outsized returns as new technologies are tested in the years to come. One industry of interest is software as a service technologies. It's evident that SaaS solutions are slowly replacing age-old ways of doing business. That includes everything from communications to data management to marketing to security. The list is endless. All of those outdated methods are now slowly but surely being replaced by SaaS platforms and applications. Brandon Medford, senior analyst at Gartner, has commented on the changing landscape, putting it this way. Organizations are advancing their timelines on digital business initiatives and moving rapidly to the cloud in an effort to modernize environments, improve system reliability, support hybrid work models, and address other new realities compelled by the pandemic. It's been one of the industries that have been slaughtered on the market in the last several months, but nonetheless, several of these companies have already provided multi-bagger returns to date. Let's zoom out and look at the impact they've had on how we do business. 80% of businesses globally now use at least one SaaS application. SaaS as an industry is estimated to be growing 6.5 times faster than the world economy. It's currently a $130 billion market opportunity with some of the highest gross margins. From 2015 to now, the industry is already roughly 5x'd in valuation, and the industry is growing at a 27.5% CAGR. That estimates that the total addressable market by 2028 will be $717 billion. So it's fair to say we're still in the very early stages for SaaS, but it's a competitive landscape nonetheless, with roughly 16,000 companies competing in the US alone. Finally, we've got artificial intelligence, or AI. And despite the lengths we've gone through to describe how significant software will be in the future, near and long term, according to NVIDIA CEO Jensen Huang, software is eating the world, but AI is going to eat software. While there may be some truth to his statement, one thing is for sure, the AI industry is undergoing tremendous growth in tandem with SaaS. Manufacturing, healthcare, finance, and autonomous driving are just a handful of divisions that are seeing disruptive growth arrive from its existence. Now, industry experts have skewed forecasts for the growth rate of this industry, but for the most part, estimates have been made for a CAGR in the region of the mid to high 30s, some are even in the 40%. Grandview Research estimates a 40% CAGR from its previous $96 billion valuation made in 2021. That would be a staggering $997 billion, just shy of $1 trillion by 2028. Just 6 years away. When we think about these opportunities, there's still a couple of standout options in the big tech players, namely Amazon and Google. But we could see a potential shift over the course of the next decade to new companies. We'll certainly be keeping an eye out for any up-and-comers. To summarize, when we're looking at growth rates of that magnitude, we can forgive and forget high PE multiples, the ratio often used to determine fair value of a business. What investors need to focus on for these growth industries is the following: revenue growth, customer growth, margin expansion, market share, and the profitability roadmap, if they're not already profitable. So there we have it. Those are some of the largest opportunities for investors in the next several years. Are there any stocks that you hold? Let us know in the comments below. Remember to like, share, subscribe, and click the bell icon if you want to keep up to date with the latest videos we're publishing. Until next time, happy investing.